Good day, good evening, good afternoon. How are you doing today, guys? In this video, I want to show you the reason why you need to confirm your entries even if you're using smart money concept or support and resistance or any trading strategy that you use, because this will benefit you to enter the market precisely. So in this video, I want to show you why I use a confirmation throughout my trading. So the first reason is that price is price. It can do anything. You can enter here, maybe let's say you are using smart money concept and you see this as a break of structure here, and then you enter the market right here with a buy limit order, and then the market eventually shoot lower. But if you have a confirmation candle around this area or any confirmation entry strategy, this will help you to avoid entering on this kind of situations. And another thing is that you can see this as your order block or demand zone, and then you will try to enter, maybe let's say around here again, and then the market decide to shoot lower aggressively. So in this kind of situations, this will minimize the risk towards your entries, so you will avoid entering bad trades on your daily basis. So that's how we say price is price. It can do anything at the end of the day. And then another thing is that to confirm your entries, you will have confidence that the market might potentially move to the direction that you have expected. So if you don't know how to read candlesticks, there are a lot of videos online that will teach you how to read candlesticks if you are using candlesticks as your confirmation, or maybe you are using support and resistance as your confirmation. But in my case, I use candlesticks as a confirmation candle. And another thing before we move on, I'll also show you an example what we can see as traders when we trade every day. So for me, in my case, if you know when to enter, you will always use your time frame as your entry guideline. Like for instance, in my case, I use confirmation candles. I use a candlesticks as a confirmation candle, meaning if I want to trade the 4 hours, I will have 4 hours to spare throughout the day before I can wait for another candle to close. Meaning I don't have to like look at the chart over and over again looking for an entry. I will just wait, or maybe make an analysis and then wait for the market to close with that confirmation candle. So even if you are trading a daily time frame, that means you have to wait 24 hours for that candle to close before you can make your entries, and that means you'll hold your trade even longer period of time. But if you are trading on the 1 minute, that means you have to be very focused to be on that time frame until you see an entry confirmation candle. And then another thing is that the reason why we need to have a confirmation is that it can help you to exit the market precisely. Like for an example, you enter your trade here and then you see that you have a supply zone at this area. So that means you can take your profit here and then try to sell, or you can put this trade that you have entered here and put it to break even, because price is price. At the end of the day, it can still come and stop you out even when you were in profit in the first place. So that's how you should understand it. So I'll try to make an example with a chart so that we can at least dive deep into this, because this is just a quick and short video. But if you like this video so far, guys, please consider subscribing to the channel and give this video a like, and then comment below with your experiences throughout your trading career, because I know some of you are not even beginners, some of you are pros, some of you are still learning, some of you are still starting out. They didn't even know what is a bullish or a bearish candlestick, what is a trend line whatsoever. But we are here to help each other so that we can be better traders at the end of the day. So let's move on to a real chart so that we can do at least one example. Okay, let's let's look at this area here, this shaded area. Okay, let me remove this so that we can identify this. The first thing, let's say this is a trader 1. This is a trader 1 here. And don't tell me that you don't even see what I'm going to do here, because this is just a simple concept. Let's say you say this is your break of structure, and then another one here, and you see this kind of pattern. See a move down, a move, and then a break of structure, and then another low here, and then you see something like this, and you are looking to go long here because you believe that the market is making a new higher low here. This is a potential higher low at this area. You are expecting the market to make this low here. So that means your analysis will be something like this. The market stops you out if your stop loss is below here. The market just stop you out and then move higher aggressively. So this will be your pain. Okay, so let's move on to trader 2. And before we move on to trader 2, we can see that these candlesticks are just bearish. There's no bullish candlestick here. Okay, let's move on to trader 2. This is a trader 2. Trader 2 is a breakout trader. Don't tell me you don't see this as a flag pattern. This is just a pure flag pattern. You enter around this area with a breakout. Maybe you say this is your breakout candlestick. That means you'll never see profit at the end of the day. The market will just aggressively shoot higher. And this one here, this pattern here is very clear. You can see that you have an impulse and then you have a correction on the side. So that means your expectation will be to the downside. So I was a trader like this before trading the breakouts, but the reason why I stopped using it is that I will enter here and then my stop loss will be above here. So this huge momentum here is very huge for my risk taking. So that's why I stopped using this entry style. But even if I see a correction like this, I will have to see a supply zone to enter here so that when price break to the downside, I can just wait or put my trade to break even before it can do this up move here. My chart is becoming messy, guys. Don't have to worry about that. So let's look at trader number 3, a confirmation trader. Okay, this is trader number 3. Let's say he used the first setup like this. So he was trying to enter here, for example. Okay, let me zoom in a little bit so that everything can be clear. Okay, but as we can see, there is no confirmation candle whatsoever around this area. So that means this trader did not enter this trade, but you can try to enter again when this low was taken, looking at, let's say, maybe he will say, because there are a lot of different brokers out there, this could be equal lows in the other brokers. And then he notices that price broke through this lows here, and then he will try to enter again around this area with this bullish candle close. Or maybe after this bullish candle close, he can put a buy limit order on the sniper area. If you don't know what is a sniper area, go check out the video in the description below so that you can understand how you can trade those sniper entries. But this one is going to be difficult because some of the times it doesn't even come and tap that sniper entry level. And even with your broker, sometimes it doesn't even come and fill that up because of certain reasons that we don't know. So that means this trader could have profited from this trade because he or she is confirming his trades. But if you don't confirm your trades using a sell or buy limit order or something like that, that means you will miss a lot of trades or you will enter bad trades based on news event or something like that. But it all depends. Sometimes you can catch those insane moves. It doesn't mean all strategies needs to be confirmed. All trading strategies that have been backtested and have seen that they are working over time, you can keep using that. And my advice to you guys is that stop jumping into strategies every day. That will end up confusing you in the end to stop believing in yourself. So like for instance, we can see that we have a demand zone over here, and the trader could have entered here, the one that uses a buy limit. But for a confirmation trader, this candlestick is very huge to be called a confirmation candle, because you will enter around here and then your stop loss will be below, even though you are going to catch a few pips to the upside, but it's not even that necessary to do that. So you have to stop using a bigger stop loss even if you know the trade is going to work out. Bigger stop loss will eventually affect your trading account like big time. like not even like it's going to affect your trading account big time. So guys, this was not a strategy video. This is something that I wanted to guide you with, because it's something that was in my heart, so that I wanted to share with you guys. So I guess I'll see you on the next video, where we'll dive deep into other topics of trading. Bye. Also, don't forget to subscribe and check other videos in the channel that might help you a lot. See you on the next one, guys.